Hello, everybody. I'm your daily trader, Ben. Today we're missing Kagan, but today I want to talk about one of my first strategies that I first used when learning SMC. Now, is this part of the algo? No. Is this trap trading? Not really. However, this is still a really powerful method that I use today, right? Using a combination of inducements, order flow, and structure, right? The reason why I'm okay with giving this out is simply because why not, right? WWA and Lit try to charge you $10,000 for this. Why charge 10,000 when you can just come to my page for free and learn how they trade, right? So anyways, let's get right into it. First of all, I want to give credit to the strategy to a couple YouTubers, right? Shout out Waskambe. He loves this type of methodology. He may have a different view from it, so don't take all of it from me as saying that this is his strategy at all. I also want to give, of course, credit to the WWA and Lit communities, even though they charge 10,000 for it. And also, I want to give credit to ICT for pretty much coming up with smart money concepts. He pretty much did come up with smart money concepts. Anyways, what's the basis of this strategy? The basis of this strategy is actually fairly simple. All we really need to see is a market either moving up or down continuously within its trend, right? So we need to see a constant downtrend or a constant uptrend within the market, right? So the basis of the strategy is that we are trading with the trend, right? Now, this is great for people who trade EU, GU, and gold, because as you know, if you try and trade against the trend for especially gold, you are definitely going to get burned. So what can we see here? We can see that the market has taken 1, 2, 3 impulses to the downside. Now, does it always have to be 3 impulses? No, not necessarily. But what we do need to see is 2 breaks of structure occurring in the market, right? After each consecutive break of structure, we need to see each extreme produce order flow from one to another in a very short period amount of time. For example, if we see that price is trending down and then price has done all this jibber jabber in between and then comes back up and produces order flow, I don't like it. Time and price is a really big thing, right? A lot of people who are telling you that you need to wait for liquidity to build up in between, I think that's false personally, right? Really, the real inducements that are occurring in the market are not happening before a POI. I can promise you that. You can ask any of my students that learn from me, and they will tell you that people who are looking for POIs are looking for the wrong places in the market. You should not be looking for POIs. You should really be looking for inducements, right? Understanding where liquidity injections are injecting liquidity in the market, right? You got to be able to see where the market is holding its buy stops or sell stops for retail traders, as well as SMC. I am no longer truly an SSC trader. I am now truly an algo trader. But anyways, this is the primary model for the trade. If you want to see it within an uptrend, this is how we would see it in an uptrend. First, let me change the color. So we have something else. Very similarly, we want to see one break of structure, right? We want to see another break of structure, right? And then we want to start to see price kind of build liquidity to the downside, kind of form an inducement, right? Come up, sweep the inducement into the POI, and then price should rocket, right? I feel like this is a very well-known strategy. However, I want to give my take on it, right? We can see how the market is primarily moving here from both a buy perspective and a sell perspective, right? And we can see how the market in the bullish scenario is making higher highs and higher lows, and that the demand chain or the order flow is where we are entering price. Now, it is very, very important to understand that there is somewhat of an extreme here on a lower time frame. We need to understand this because there needs to be a proper sweep of this extreme into the POI in order for this to be valid. So let me break this down for you for annotations, right? We need to have 2 BOSs, right? That would be this here, right? We need to have extreme order flow right? We need to have a clear liquidity buildup. We need the sweep liquidity to catalyze the move in the POI. Now, you guys are probably thinking, is that really just it? No, absolutely not. Let's take a look inside of here, right? If you want to get some refinements in this area, not just instant entry, right, you have to be looking at the 1 minute, right? And I'm going to show you that example here in a little bit. Right now that we know the base model from a higher time frame perspective here, we can now move into the 1 minute and understand what needs to happen in order for us to have confirmation. A lot of the time, we need to see the market come into the POI. And my favorite thing is we need to have 1, 2, 3 liquidity grabs on the 1 minute, right? So we need to see 1, 2, 3 liquidity grabs on the 1 minute. Now, is it necessary to always have 3 liquidity grabs? No, not always. Sometimes we only need 1 or 2, right? But if there's 3 liquidity grabs happening on a lower time frame within this POI, then your odds pretty much increase, right? And your chances of winning also increase as well. So you're primarily putting the odds in your favor by looking for consecutive liquidity grabs within the higher time frame POIs. Now, what do we need after these 3 liquidity grabs? We need some sort of change of character. Now, that change of character could be anything, that whatever that means to you, right? We need to see either a break of this low, this trend, and then a retest into this extreme here. Or we need to see price come in, retest, break structure one more time. If you want more clarity, come back up, and we will see that would be order flow establishing on the 1 minute before price coming back down. Hopefully we all understand that this is occurring in this little area right here. Now, I understand this probably makes sense from a diagram perspective. You all probably want to see a live example. Now, I need to go back into time here and find one, and I haven't really prepped anything, but we're going to go back in time on GU since that's what I have up right now, and we're going to see what we can do, all right? And hopefully I can move on to some other pairs as well and show you that too. Anyways, let's come over here, right, and look at GU. All right, let's mark up our structure and see if we can find whatever we need. All right, already I see one particular area in which we might have consecutive BOSs and consecutive order flow. I can see over here that we have consecutive BOSs, but look, there's no order flow entering the market. Right? Order flow is where we're going to be able to see where the extreme moves are going to be occurring in the market. I see over here that we have a massive change of character, so I know we are switching to the sell side, right? And then after we have this huge change of character and or break structure, right, we can see here that we are having consecutive BOSs to the downside, right? So what can we assume? Well, from here, we can understand that there is no order flow establishing at this point here, right? However, at these two extremes here, I can see that order flow is entering the market, right? If we can identify where order flow is entering the market, you're going to be very, very successful. If you don't know what order flow is, please go back into my other videos and take a look. All right, what else do we see here? Now, a lot of you have been taught that this is an OB right here. This is what you should be trading, right? This is your 15-minute OB. Wrong. You want to be finding where there's imbalance in the market, not where there's OBs. If you're strictly looking for OBs or POIs, you've been taught the wrong way and your mentor is not teaching you the right stuff. You need to be finding imbalances and inducements, right? Again, I don't really trade this way that much anymore, but this was one of my first strategies and it still works, right? So I figured I'd share it with you guys. What I see in this area is a large piece of supply right here, right? The market's not perfect, so OBs aren't perfect, right? So this whole area right here is an extreme to me. It's where there's a bunch of supply and imbalance coming in the market. I can clearly see that it comes and gets mitigated over here. What else do I see? I do not see a clear OB with an imbalance, but what else is there? There's wicks. I've explained before, but wicks are also imbalances in the market, right? People who are telling you that wicks are not a good place for rejection, well, let's take a look. Oh, wow. It looks like the wicks were taken as an OB over here. Well, what are wicks on a smaller time frame? Wicks are just candle closures on a smaller time frame, right? If we were to go into, let's say, the 5-minute over here, right, there might be candle closures around this area. I highly recommend that you make your way into the smaller time frames in order to see if there is wick rejection around these areas, right? So let's go ahead and finish this example so you guys understand how to implement this strategy on a day-by-day basis. And I'll go into EU2 in a little bit here to kind of see if there's another example. So what do we see? We have a BOS, we have a BOS, and over here we have another break of structure, right? Well, I've told you guys before, but we always need a liquidity sweep to catalyze our move. Well, did this sweep liquidity beforehand? Absolutely. We have swept liquidity here. Did we mitigate something from the past? Absolutely. It looks like price started order flow actually a little earlier around here, right? What else can we assume? Well, now what do we need? We need to have some sort of liquidity buildup coming up to our POI here. And do we have a liquidity buildup? Absolutely, right? We can see that price is clearly making some sort of inducement like pattern here, right? If you've watched my videos on price cycle inducement, you would understand that this would be 1, 2, 3 cycles of rise. So right here already, we have 3 cycles of rise, right? This would be considered price cycle inducement. It is not confirmation to our analysis. Rather, it is just added confluence into our analysis that helps us understand that price is very close to starting to reverse. What else did I talk about in the diagrams over here? We also see that we need what? Some sort of sweep into the POI. Well, it looks like on our last extreme right here, we had one nice sweep of liquidity coming into that POI before shorting, right? So it looks like we could have had an instant entry right here. And just simply on the 15-minute chart, not even going into the 1 minute, we only have 5 pips of drawdown, right? And just right here alone is a 1 to 5 RR, right? It would be safe to say we could start aiming right here in order to get that 1 to 5. However, I know we need to target previous liquidity. And what's the most recent liquidity I see is this trend line. So as soon as we get that trend line hit, we are already at a 1 to 8. Now, if you remember all my other videos, you know that I talk about smart money order flow trap, right? The SMOFT, right? No one really is ever talking about SMOFT. Basically what SMOFT is we want to grab the OB and the POI before the one that we produced order flow to, right? So this is where most SMC traders are looking to get in their position. But where are all the SMOFT traders coming in? Coming in right here, right? And you're probably like, oh, Ben, we just wicked right here. Well, in reality, we need to take our stop losses all the way to the top of this extreme here. All right, so if we were to get into this position also here, right, considering that we've gotten in here, grabbed our 1 to 8, and knowing that a smart money order flow trap is still possible, we could have entered here, stops above this area right here, right? And then we could have had this whole move coming down to the downside. Like I said, this strategy is used for continuations, right? We are trading with the trend. So the likelihood, right, and the win rate for this strategy is very, very high. Here's something else I also want to mention. We see that we have this trend line here. It's not talked about enough, but you can simply copy it, paste another one, right? Bring it up to the swing high that it started, right? And you can see that this is the main channel that price is supposed to be trading in. As soon as price comes above here, we know that price is what? In a premium, right? So when we're in a premium right here, we can understand that when we come to mitigate the extreme from yesterday, that there is also a likelihood that price is going to reverse. So hopefully one can understand by this analysis that there is more than just one thing going on here, right? We have constant mitigation of BOSs. High time frame is short, right? We have a liquidity buildup coming up to this POI here. We have price cycle inducement, which are little tiny liquidity inducement traps coming into this POI here, right? We understand smart money order flow trap, which allows us to know that we may not actually just mitigate here. We might actually mitigate what's above right here, right? And that's how we were able to grab more shorts into this area right over here. And did we sweep liquidity coming into this POI? Absolutely. This is the liquidity, right? This is the trap. So hopefully this gives you guys a little bit more of an understanding of how I used to trade back in the day. I was using this strategy about 2 years ago, and it still works today, right? It doesn't work nearly as well as it used to 2 years ago, right? A lot of the time, this wouldn't happen. But now that this is happening, now you at least know it's happening and can trade with it, right? It actually might make you more money. You can grab a 1 to 8 here, and then you can grab like a 1 to 20 over here, make 28% in a week, be done for the week, right? Let's go to E. Let's see if we can find another example of this. Already right off the bat, I see like 3 examples, right? I see one here, consecutive BOSs, right here, consecutive BOSs, right? And what do we have? Order flow. Oh, well, it doesn't look like this one has order flow. Actually, it does. We can assume from this point here, right, to this point here, that there is order flow, right? It looks like this actually comes down all the way to here. We mitigate and drop, right? I'm not going to give an in-depth analysis right now. You guys kind of understand the idea, but we just need consecutive BOSs happening within the same liquidity pool. Notice how this is just a smaller version of what this is over here, right? BOS, BOS, right? And what do we have? We have a sweep, right? Into what? This extreme over here, right? It looks like this got swept here, and I'm sure this is receiving order flow from some sort of extreme, and it is. It's receiving order flow from this extreme wick right here. We can clearly see order flow is entering the market, right? We've swept liquidity, validating this POI. We clearly have this structural inducement here, right? Inducing this POI. And then as we can see after this BOS, we are then able to mitigate and then make a draw, right? Now, does this happen on all time frames? Absolutely. You can do this on the 4-hour, 15-minute, 1 minute. It really doesn't matter. My favorite time frame is really the 15-minute, right? The 15-minute generally just has very clean setups, and it's just easier to use for the most part. Let's see if we can find an example from a long time ago, right? Bear with me here. I want to show you the resemblance between this here and all these right here as well, to show you that the market is moving the same all the time, right? Let me get rid of this. What do we notice? Here's your BOS. Here's your second BOS. That's your consecutive area, right? We have our sweep right here, right? We're receiving, I see a little bit of supply coming in the market right around this area here, right? It looks like, yep, this is a flip zone. All right, looks like these are retail flip zones right here, right? I see that this supply has come to get mitigated over here. Now, what's important? What do I notice here? This isn't receiving order flow from anything over here is what I'm starting to recognize, right? Do we always need order flow? You know, no, but it does increase your odds, right? This is still a valid trade as it fits all the other criteria, right? Consecutive BOSs, this sweeps liquidity. We clearly have an inducement right here that gets swept into here. This is somewhat valid. Does it decrease your chances? Absolutely. I would say your chances of hitting go from 90% to maybe 70%, right? Really just understanding these setups is going to help you tremendously. But yeah, let's go back to the original diagrams over here on GU, right? To kind of just implement it one more time in your head, right? This was one of my first strategies. I still use it here and there today, right? But if you're able to spot this, right, across any pair, I recommend doing it on any of the major pairs. You will see a major success rate, right? Oh, and I didn't even go over the 1 minute. Let me go over the 1 minute. Let me do that real quick before I leave. Let's go right over here. Top in the 1 minute. Let's see what we got going on. What do I see coming into this POI? Remember, I was talking about liquidity grabs. Here's one liquidity grab. Here's a second liquidity grab, right? Coming into that POI. What else do I see? Remember, I said you need to see some sort of change of character, right? Before entering short. Here's your change of character, right? Retail, right? From a retail perspective, this was our break. Here's that retest of what is now support, turn resistance, right? And now price is starting to fall. Would I have been able to grab a position here? Doesn't look like it, right? So we might have to catch a position later down here if we were truly trading the 1 minute. Here again is our next change of character or break of structure on a higher time frame. Here is a nice sweep of liquidity. And then our next entry would have been right here on the 1 minute if you truly wanted to get the continuations of this trade here. Right? This would have been the refinement of this up here. Now let's move a little forward, right? Because I want to see if we're able to see some sort of 1 minute pattern within this POI here. Because I want to see if I can find a nice little 1 minute setup for you guys. Let's go ahead and pause it there. All right, this one will do. All right, so what do we see here? I want to mark up the structure I'm seeing on the 1 minute, right? I want to see that there was some sort of change of character, right, coming on the 1 minute, right? Now, what also do I want to see? I want to see an OB around here, for one, that has imbalance, right? It's not mitigated. Well, it looks to me right here, this one's mitigated, this one's mitigated. The only one that's not mitigated is this one right here. You're probably like, why did I not keep it right here? Very simple. I always have my stop losses to the swing highs. In reality, yes, this right here is your OB, but what you have to understand is, did this OB sweep anything? No, it was this candle right here that swept. So in reality, your stop loss should really be pulled up here. To make that a little bit more clear, here's your sweep on the 1 minute, right? Which allows us to bring our stops up. We see that there's a clear imbalance. This is all inducement to that 1 minute POI. This is a little bit more of a cleaner, refined setup. And you can see just to these lows here, that is already a 1 to 22. If you want to see me trade live like this, go ahead and follow me on Instagram at seisners.trading.journal. Please click the link in my bio if you want to check out my Discord community and talk to my students, talk to me. I'm very, very active, guys, right? I'm always willing to answer any questions that you have, right? I don't really teach this style of trading anymore. I find it to be not as effective as the new style that I trade. I trade more like algo style, right? So if you guys are familiar with REM's ping pong or RSD's ping pong or Cool Caribbean, I kind of trade more of that type of style now, as it took me forever to learn. That's what I teach now. This type of stuff I don't mind giving out for free anymore. So if you want to have more information on just SMC in general, you know, just reach out to me on Instagram and I'll really get back to your DMs ASAP, right? I'm always monitoring my DMs to make sure I'm answering everybody's questions. I also have this entry helper here if anyone wants it. And then I got this neat little indicator here for liquidity cycles. which is also something I teach and that is unique to me. So, no, I did not come up with liquidity injections. However, I have created an indicator that defines injections a little bit more accurately than how the naked eye might find them. So if this is something you want, definitely DM me on Instagram and I'll get back to you. But other than that, hope you guys enjoyed today's video. I really do plan on uploading a little bit more frequently. But with that being said, peace.